Now that we are into the month of March, we can look back at the month that was. During the first week of February, markets responded well to thoughts that the huge stimulus plan and the financial system overhaul would eventually drag the US out of recession. However, their confidence has crumbled after a wave upon wave of weak news that is coming out of the US. February saw 600,000 people lose their jobs in the US, which was the biggest decline in 43 years. February then saw a sharp contraction in economic growth of over 6% on an annualised basis. This suggests that the US was in a much worse state than initially thought through the end of 2008. The effect of this bad news was quite dramatic on markets. These effects I have been talking about on nearly a daily basis for some time. Share markets globally were hammered. For example, the S&P 500, which is a major share market index, lost 11% over the last 3 weeks in February. In context, it posted its weakest February since 1933. To take some positive out of this morning, global shares were actually only down marginally, while the Nasdaq actually showed some small gains. The reason I continue to talk about the US economy is that it has such a big bearing on the global outlook, including our own. As a result of the weak US economy and weak markets, we have seen the New Zealand dollar slide over February as investors in the New Zealand dollar effectively stuff their money into their bags and ship it back home. The slides have continued in the early part of March, with the New Zealand dollar now trading in the mid 49-cent range against the US dollar. What we have also seen is a movement in the interest rate and bond markets. Investors are now getting a bit titchy about throwing money into bonds, given the huge amount of debt that will need to be raised over the next few years. This amount of debt has the potential to be quite inflationary at some point, and so investors are looking for a small premium for their money. The effect has been that longer-term bond yields have increased marginally, as well as wholesale interest rate markets. Land continues to buck the trend of everything going on globally, with local prices still holding well and even showing some gains in some areas. International prices remain steady, and with a further weakening in the New Zealand dollar may give meat companies further optimism to hold prices for the time being. Anecdotes suggest that our major market, the UK, is still holding strong. It seems a much lower kill is keeping this market tight, although remember I have been saying for some time that the UK economy is looking pretty woeful. There is market chatter that other areas of the globe have dropped off, which makes sense given the turmoil and big downturn in global trade. Store prices still seem to be going pretty well, although remember that these don't always reflect what is happening on the global front.